Hello friends, today I want to help you understand what is a land contract in real estate. So what is a land contract in real estate? Well, by the end of this video, you're going to have a great comprehensive understanding of what land contracts are. And by doing so, we'll give you the knowledge to utilize this tool effectively. And I'll even share with you a strategy that you can utilize for land contracts that is a winner for you as a real estate investor. So what sets land contracts apart from traditional lending methods? And why might they be a preferable option in some real estate transactions? Well, let's explore these questions by first explaining the difference a land contract has to a traditional purchase and sales agreement. Next, I'll explain why land contracts are both beneficial for buyer and seller. And finally, I'll identify the strategy that I'm utilizing right now that uses land contracts. If you're ready, let's go. So what's the main difference between a land contract and a traditional purchase and sales agreement? So a land contract is a seller financing agreement with terms that have been negotiated between the buyer and the seller. So there's no bank involved. There's no third-party mortgage lender that does any of the negotiating. It's between buyer and seller. And because of that, many of the provisions inside this contract vary depending on the situation between the buyer and the seller. And they aren't subject to any confining rules or regulations that many mortgages have. So it's a lot cleaner and easier and faster. You know, in contrast, mortgages typically come with a lot of rules and regulations associated with them. And a lot of times the interest rate's going to vary on what's happening in the market. And there might even be adjustable mortgages that might start out low but go higher depending on what happens in the market. With a land contract, the seller can set the interest rate indefinitely at their discretion. And in addition to a land contract, the seller actually retains title to the property until all of the payments are made in full by the buyer and all the conditions of the contract have been met. So what are some of the benefits to both the buyer and a seller when it comes to land contracts? So if you're a buyer and you're entering into a land contract, this would be one of the reasons why, and this would be some of the benefits to you. If you are a buyer who cannot afford a down payment or closing cost, a land contract could be a viable option. If you are a buyer who's been hit with some negative credit on your credit report because of maybe a short sale or a foreclosure or a bunch of late payments and you cannot get traditional financing, a land contract is a great alternative. Or if you are just getting started out there in the world and you have a very weak credit history, you don't have enough things that have built up your credit, this is another option to have home ownership. What about the seller? What are some of the benefits of a seller in a land contract? And I will just say this, I think most of the benefits, outside of the ones I just explained for the buyer, most of the benefits in a land contract fall under the seller. It's definitely something that is seller friendly. First off, the seller can charge more than a bank would, thereby pulling in extra income. Here's a big one. If the buyer defaults on the payments, the buyer keeps the property and all the payments made up to that point. It definitely takes a lot less time to finalize a land contract than a traditional mortgage. Sellers usually don't need to pay off any underlying mortgages. Instead, they can make mortgage payments with the buyer's installment payments and pocket any profit. In essence, a land contract, as I said, really benefits the seller, and here's probably the easiest definition and explanation of why. The seller can act as the landlord without any of the landlord responsibilities, meaning they are not responsible for the taxes, the insurance, the maintenance, the utilities. All of that falls on the buyer. However, if the buyer stops making payments, and it could be one payment depending on how it's negotiated in the land contract, the seller can evict the buyer from that property without having to foreclose on the property. If you've ever seen what a bank goes through when it comes to a foreclosure, it is a tedious, long, laborious process. And sometimes it's 120, 150, 180 days before that's fully executed. And it takes a lot of time. The last thing you want to do as a homeowner who's doing a seller finance is someone who is needing to foreclose on a property. So a land contract wipes all of that out and allows you to be in a position where you can evict the person if they stop making payments. That is huge for you as a seller. I want to finish with one of the coolest strategies that I've seen in real estate, and it utilizes a land contract. And this strategy is called a slow flip. Now, if you've never heard of a slow flip, I think you're going to be pretty surprised about how amazing it is. So this is how it works, and it's actually what I'm doing right now. As the market has shifted and interest rates are higher, I'm utilizing this strategy to build my real estate empire. So I'm searching right now in the Midwest. I'm looking for properties below $100,000, but my sweet spot is properties between $40,000 and $70,000. Now, in order for this strategy to work the right way, I need to negotiate and I need to get offers accepted that are about 30, 35, 40% lower than asking price. So I might be looking for properties that have been on a market for a while so I can offer these low prices. And because of that, I'm only getting about 1 out of every 15 offers accepted. So that's the ratio. 1 out of 15 is getting accepted. accepted. And I'm looking for homes that I don't have to do a lot of work on. Maybe a little bit of cosmetic work, but I don't have to do any major repairs. And I know that might seem like a tall task, but if you're looking in the right areas, I've actually bought some homes that have already had renters in there, and I've gone to those renters and utilized this slow flip strategy with them. So it is possible, I promise you. So let's say you find a property, it's listed at $70,000. You offer and you get $50,000 on the property. What I do at this point, it's really important. I go to a hard money lender that's charging anywhere between 8 to 12%. Hopefully I'm on that lower end, but let's say it's 10%. So I borrow $50,000 from that hard money lender, zero money out of my pocket. Because I have cash, I can negotiate a lower price. I close on that property within 30 days. I then owe $50,000 to the hard money lender, and I'm looking to amortize that out over a 5, 6, 7, 8-year period of time. So I want you to think of it this way. I'm treating that mortgage from the hard money lender as if it were a car loan, right? When you get a car loan, how quickly do you pay back that loan? It's not 30 years, it's not 15 years. Typically it's 3, 4, 5. Most of the time it's 5, 6, or 7 years for a lot of people, especially with how expensive cars are nowadays. But let's say I can get that paid back in 6, 7, or 8 years. To him, that's what I'm looking for. Now that I have that in place, I'm going to turn around and sell this asset to somebody else who wants to own a home but maybe can't through traditional mortgages. So I'm selling the home to them for maybe $75,000, right? But even doing that, I'm going to charge a little bit higher interest rate. It's still probably going to be, the mortgage payment to me through seller financing is still probably going to be a little bit less than renting the home, or just close to the same. Even if it's a little bit more, if they have to come in and they actually own the home, and I might even allow them to not put down a down payment, and there's very little closing costs, if any. The payment coming to me from the person who I just sold the home to on a slow flip through seller financing, that payment every single month is going to be able to pay for my mortgage payment. But I've got them on a 30-year mortgage. $50,000, $75,000. If they ever get out of that, or they sell the home, or if they stop making payments, I evict them. I keep all the payments they've ever made. I could turn around and sell the home or do the exact same strategy. So follow me down this path. What happens after 7 years after this mortgage is paid off? I didn't make very much money throughout that whole process, right? But when it's paid off, I have zero payment to any mortgage. So the $950,000 coming in from the buyer to me is going to continue for the next 22 to 23 years. And this is where it gets exciting, because it's zero money out of my pocket and there's a lot of pieces of property that fit this bill. I could then have 10, 20, 100 of these properties. If you had 100 properties, say you acquired them over the next 3, 4 years, and within 6 to 10 years from now, all those payments were paid off, you had 100 properties bringing in $900 a month, that's a pretty good monthly income, or something that set you up or your family up for a long, long time. That's why I love slow flips and utilizing land contract, because it really protects you as a seller. So these are things that I've seen work really well by utilizing land contracts for a strategy called slow flips. And I'd be really interested in your feedback. What have you seen? Please comment below. Let's engage in a dialogue. And as always, just for stopping by and watching the video, I've got a free gift for you. It is a short-term rental calculator. You put in the purchase price, the income, the expenses. It does all the work. It's going to spit out to you whether it is a good deal or not. And just click on the link below, aaronsfreetraining.com. 100% free, no questions asked. And thanks for stopping by. Have an amazing day.